The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 2nd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, if you cannot dial in, why don't you just go ahead and send me an email, Steve at TFNN.com. Of course, inside that heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 17 points at 21,980, having earlier crossed that 22,000 barrier. S&P off 7 points. She's trading at 24.69. NASDAQ 100 down 21 points. That's in light of even Apple trading up 681. 156.87 is what she's printing. We looked at a resistance zone yesterday in Apple. Well, I believe we're right there or underneath. We'll go take a look at that a little bit later in the show. The semiconductors off 12. That's down 1%, as well as Russell 2000 up 1 2/10% to the downside, 17 points. You've got the VIX up 36 pennies. No big deal. Perhaps we'll go see where that is in relation to its 50-day exponential moving average. Light sweet crude up 27 cents. Gold is down $1. Silver's off 6 pennies. Leading the charge here to the upside, it's Illumina up $23. Spark Therapeutics up 13. That's 13 and 19% respectively. Humana is up 11. Cadent Inc. is up $10. That's 13%. Spirit Aero Systems Holdings, SPR, that's up 16%. Papa John's, they're having a good day, up 11%. That would be $7.56. Trading out at $78.69. Coherent Inc. is the big loser to the downside, up 21%. That's 55 buckaroonies. Ultimate Software down $25, 11% to the downside. Priceline off under 1%. That's $17. Pioneer Natural Resources off 10%. $16. So there's some big movers to the downside for sure, and some big movers to the upside. But let's begin. Let's begin by trying. What I like to do, especially on days like today, is really figure out, see if there is a way that you and I can figure out good levels of support and resistance. Now, inside the ES, actually, I've done that. I've already done that work for you. And so let's go take a look at that. Now, we've got the equity futures contracts. If you're watching us on TigerTV, that's a wonderful thing. If you're listening on the radio or your mobile device out there, well, let me describe to you what it is we're looking at. This chart here shows the 4 equity futures contract. The ES Mini, S&P 500 in the upper left. Upper right is the NQ. Lower right for the NASDAQ. Lower left is the Dow. Lower right is Russell 2000. Now, in the case of the ES Mini and the NASDAQ, and we'll look really kind of at the NASDAQ specifically, if we take a look at this 5-hour chart out here, 300 minutes, what you're going to see is that price found support right at the bottom of that time frame's market profile. Now, what you and I have learned, and we do not ignore this, what we have learned is to take a look at those profiles and understand the structure to determine, because this helps us to identify levels of price. And when that center line, in my case here, they're all light blue. So all you have to do is look at the three active lines out here. And when that center line is closer to the bottom, that suggests to you and I that that should be strong support. Now, that has both a bullish and a bearish meaning, because if you close below a level of strong support, just like in any battle or war out here, that's telling you that it is the sellers, often referred to as the bears, that are really in charge of the market. Now, this is a bullish structure. And we can see that resistance, even last night, as price gapped up inside the NQ off of Apple's earnings, we can see that the top of that 5-hour time frame acted as resistance, 59.35. Now, we're really interested in the body of the candle, not so much the wicks or the upper or lower shadows out there, but we do pay attention to those. And we can see that during this past 5-hour time frame, which ends at, I believe, 2 o'clock, we have explored that entire box. So what are the levels you want to be watching for? Well, 58.59 is strong support. It's proved to be that way thus far. Price right now just hanging around that point of control. Now, this is the area here where both buyers and sellers are most comfortable, either buying or selling. So we'll see who actually wins that battle. Now, that's in the NQ. In the ES Mini, price never got down to the bottom of its 5-hour box. It is also a bullish structure, meaning that center line closer to the bottom, and price got down to that point of control. You never know whether it's that POC, whether it's a center line, or it's going to be the top or the bottom. It's going to act as resistance or support. In this case, we're clearly looking for support. What we do know is this 24.64 level is held to support. The key area here inside the ES Mini for the bears is going to be 24.59. It's also a key level for the bulls, because if that area gets cracked, that tells you we're headed to lower prices. And the only step up from the 5-hour chart that I really take a look at would be the daily chart, and then we can go take a look at that should, in fact, that occur. Now, in the case of the Dow, just to show you how well these lines are acting for both either resistance or support, and the Dow has been the strong dog out here. On this 5-hour chart, you'll clearly see that when Apple came out with their earnings last night, during that first 5-hour period, that took us from 6 o'clock until 11 p.m., there was a nice little shooting star that formed. Now, that shooting star candle, the opposite of the hammer, works really the same way in identifying support or resistance. In this case here, it would clearly be resistance. Now, my experience on these shooting star candles, they either work or they don't. So what's interesting here is thus far, you can't really say it's worked. Now, when I say that, what I really mean is that very next candle session has follow through. In this case here, be follow through to the downside. We haven't seen that. So that's got to make you say, something to think about. But we do know is 21,961 in the equities futures contract is a key level of resistance. If the Dow equity futures contract closes above that, well, first, price is going to go take out, or going to try to take out, yesterday's high, the top of that shooting star. And should it do that, well, then it zoom to the upside. There's a larger A to B equals CD pattern that completes at, 22.6, something like that. So what you'd be watching for is 22.025. If that level fails, price runs to that, at least that 1-to-1 A to B equals CD. Support, though, down quite a bit, 21,802 to 21,842. That's why the market stopped where it did today, all because of the NQ and its TAS market profile on the 5-hour time frame. Steve Rhodes with TFNN. Right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So thanks for all the questions that are pouring in here. Let's first take a look at question number one that I didn't get to yesterday. We'll kind of go in order here. And that question was if I would take a look at the DAX. And if we take a look at the DAX out here, this is a daily chart. Now, the final close is incorrect. My apologies. 12,232 is the number that's on my screen. It was a tad lower than that out here. But that's not going to really change what it is that we need to look at. So here's what we do know about the DAX. Number one, nice bullish reversal candle yesterday. That bullish reversal candle was coming, if we look to the left-hand side of the chart, was coming really at about the same price point, not exactly, but at about the same price point where we saw that nice wide-ranging bar. Now, you're going to say there is no wide-ranging bar there, Steve. There's a gap. Exactly. Gaps and wide-ranging bars, there is not a lot of difference there. It's a breakout area. And what price did was it came back to a breakout area. Now, that was a breakout area that was shown with this very significant bullish candle out there. In fact, we had a bullish engulfing candle the day before. When I say day before, I'm referring to the date of, it looks like April the 20th. Nice little, now that was an easy bullish reversal signal because the prior day was a little doji in Stevie's window out here. But then you did have that you had follow through. Remember we talked about the shooting star? You like to see follow through when you get one of these reversal signals out here. So the bulls we know are trying to protect this area. And they went ahead and they gave us that signal yesterday with that nice bullish engulfing candle. Now that was following a nice little TD, Tom DeMark 9 count that occurred out here. Looks like that date was July 28th. That often can be a level where you see a reversal form, especially when bar number 9 is trading into bars number 5 or 6. Well, in this case here, it was bars 5 or 6. Now, what it really also means is that price will slow down once that occurs. And we've seen that. Now, here is so is this a Gartley buy pattern? And the answer is, yeah. This qualifies as a Gartley buy pattern. And what I mean by that is we had a nice little A to B equals CD to the downside. Did it complete exactly? No. Hell no. It doesn't have to complete exactly. We use these as guidelines. 12,043.98 would have been the one-to-one price estimation out here. Close enough. But is it close enough out there? Well, here's the problem. I'm going to go ahead and get rid of the A to B equals CD tool. What also occurred yesterday is we also know where the bears are. You're going to notice on the very bottom panel of my screen the price oscillator. The difference between two exponential moving averages, 19 and 39 out there. And we do use those because of rocket science. We're not going to go into that whole thing out here. But for those of you that are longtime listeners, you know that these are, this is important, that these are reliable. Very reliable. In fact, they're still being used today at the Jet Propulsion Laboratory to make sure that all the satellites are in the orbit that they're supposed to be. So we're just using it in our orbit here, which is on the stock chart. And price found resistance at Stevie's red line. You really wanted to see follow through today. Did we get follow through today? The answer is no. Perhaps the A to B equals CD pattern, in fact, is going to complete. Maybe with a spike to the downside, and then price closes back above that little horizontal line where the gap was. It would really be nice if that occurred out here. The reason is, well, because you'd get to wave number 7 on the way down. So you could have a 7th wave move. You could have a completed A to B equals CD. You could have the bullish coming back into a breakout area. I don't have volume characteristics on this, but you're coming back. And we know that the bulls are fighting their way out here. So for those of you that are really bearish the market and believe that we're in a one-world market out here, the DAX, which is the one that has really had the most significant of declines out here, going from 13,000 down to about 12,100. That's not 10%. What is that? That's probably like 7% or something along those lines out here. It's actually given you a potential bullish signal. You know you need to see it close above Stevie's red line in order to get any confirmation. That will at least take you up to about the 12,600 level. Stevie's red line priced at about 12,249. So tomorrow morning, whenever it is you get up, 3:30, 4:30, maybe 7, whatever time it is that you get up, and you want to understand, hey, what is the DAX doing? Watch for the 12,249 level. My apologies for not getting to that yesterday out there. But that is the DAX. The next question that came in was if we could go take a look at soybeans. So let's go take a look at soybeans. We're looking at the October contract out here. And the question was, I didn't read your review, but that's okay. I'm just going to go ahead and give you my take on soybeans. Well, let me switch over to that chart. And at the same time, so these are the market profiles for the 60, 240, daily, and weekly out here. And while I've got that up on my screen, I'm going to try to switch to my other chart, see if I can pull up. In this case here, I probably have to pull up the continuous contract, but that's okay. We're just looking for those similar patterns because I believe that, Mr. Z, you're looking for a bottom here, if I'm not mistaken. And if you take a look at the 60 and the 240-minute profile, they're giving you some potential signals of a bottom. If you take a look at those profile levels out there, you can see that thus far they have acted as support. So that is a positive. ZS, now I only have the March contract. Let's go to the continuous. So now let me come back here. Now we can see that this 60-minute profile has a bullish structure to it, right? The center of the box, 974, closer to the bottom, 972. However, prices found resistance at the 979 level. So if, in fact, this was a bottom, that resistance area needs to be taken out. That'll be your confirmation. If you slide over to the 4-hour chart, 240 minutes out here, you will see that at the bottom of its box, 972 out here, that the point of control and the bottom are priced the same. That is suggesting to you that that is really strong support, right? We talk about how the center of the box, when it's closer to the bottom, is giving us a bullish structure. Likewise, when the center of the box is closer to the top, it's giving us a bearish structure. Well, on the 240-minute chart, they just supersized you for lunch because they put that thing both right at the same spot out there. So that says that 972 area is really strong support. And then we go over to the daily chart. And on the daily chart, the bottom of its box is 972. So I didn't read your analysis above, but if you're looking for a signal that this is a bottom, well, goodness sakes, you got it when we take a look at the current October contract. In the case of the weekly chart out here, price has found support at that point, or really the top of the box, 973 out here. So there are indications that a nice bottom has formed. With regard to the continuous contract, you just have to say, hey, not so fast. It's just not providing us that type of nice information. Hey, does that matter or not? Not really. You like to see, like when this thing bottomed back here, it looks like on June 25th. That's the type of bottom you like to see. Price moving lower, doing less relative energy out there. A nice little, small little bullish engulfing candle. But then you get price breaking above Stevie's red line. Unlike what we saw inside of the DAX out here. Nonetheless, with regard to TAS market profiles, TAS market profiles say take the trade now and just simply use stops because you know where support is. You know where the battle is. You know where the bulls are hanging out. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's continue with the questions that have come in. So inside the Tiger's Den, Phil says, Steve, the TF pretty ugly. Thoughts on that? And where Phil was, good eye there. What Phil was looking at was earlier in the show, we were taking a look at the 5-hour charts here for each of the equity futures contract, and I conveniently ignored the 5-hour chart here for the Russell 2000. And no doubt it looks ugly. At this stage here, it's close to, it has made a 100% move of a move. I mean, it's testing a swing point on the 5-hour basis here from July the 6th, so it's completing, potentially completing an A to B equals CD to the downside. Now, granted, this is a wide-ranging bar, so it's not a signal that it's done moving lower out here, but that A to B equals CD looks something like this. But it basically has hit it almost exactly. Now, price can move sideways on this 5-hour chart for a period of time to come, and then go ahead and give you a bullish reversal signal, and then that would be a Gartley buy pattern on a 5-hour chart. Now, the question is, are these Gartley buy patterns, Gartley sell patterns? We just looked at one in the DAX earlier. Are they important? Are they worth paying attention to? Are they worth learning how to trade, add to your arsenal, your toolbox? And the answer is absolutely. However, they alone, on their own, aren't a lot of good other than giving you a price projection. You've got to combine it with Japanese candlestick charting. You just simply, you don't have to. I would suggest that you do if you want to get some more accurate signals out there, just like we took a look at inside of the DAX. Well, let's fast forward now to the Russell 2000. Instead of taking a look at, Phil, the 5-hour time frame, let's go take a look at a weekly time frame. These patterns work on each. And what we can see that occurred out here is this is a weekly. You don't see a lot of weekly Gartley buy patterns. And remember, a Gartley buy pattern has 5 different outcomes. Outcome number 5 is the one that's in play on the weekly chart as we speak right now for the Russell 2000. So the answer is it looks pretty ugly. Really depends on your time frame that you're going to look at it. You can see the nice A to B equals CD pattern that completed. That began on the week of June 22nd, 2015. That was your A point. Your B point was down here August of 2015, August 24th. There was a nice little retracement, almost a 0.618. It was 64% to be more precise. That was on November 30th. The one-to-one price level was 961, and then 901.27 was your one-to-one 0.272. And you did get that nice bullish reversal signal here, similar to what we saw inside the DAX at the week of February 15th, 2016. Now, the 4 of the 5 outcomes, 4th outcome would have taken you all the way back to the highs. Well, when that was occurring out here, remember we just on the 5-hour chart looked at a wide-ranging bar. Look over to the right and take a look at how that level was handled and taken out. Wide-ranging bar the week of November 7th out there. Huge, wide-ranging bar. Now, the 5th outcome of any Gartley pattern out here, and I'm going to use the most conservative one, is that it turns into an A to B equals CD to the upside. Now, we can't use this swing point right here from October 13th because that would violate your A to B equals CD rules out there. Yeah, because the C point would be below A. It doesn't fly. The logical one that you and I would go look at is the one that's all the way back here from October 3rd, 2011. If we're not going to take that, then we've got to probably decide to take this one right here, the one from November 12th, 2012. Longer term is what we are taking a look at out here. And if we take a look at that, the A point down here on November 12th, the week of November 12th. Our B point is out here the June 25th. The C point is down here on February 2016. The one-to-one, Phil, the one-to-one doesn't complete till we get to 1491. That also was about a 0.618 retracement level. Again, this is the conservative one. The real one that really ought to be used is the one down here from October of 2011. Nonetheless, this suggests to you and I that the Russell, when it's done with its shenanigans, wants to move higher. 1,500, 1,600 is likely the range. The other thing, if we take a look at the weekly time frame, and why price may be headed lower, and I wouldn't exactly jump on the boat that the Russell 2000 is falling apart, is that from the time period here that began on February 8th, out here, 2016, we've got a nice little rising price channel that has established itself. So not until price were to close below this rising price channel, and that may be the real nice next buy inside the Russell 2000, the bottom of that price channel. And you too can put this on your screen. Well, then the trend is your friend, and this trend is really still to the upside longer term. Don't believe me, believe your own eyes with regard to that A to B equals CD, because if we take a look at the IWM and we put it on a weekly chart out here, what you're going to notice is the swing point that you and I used the week that began June 22nd, 2015. That had volume of 137 million shares. And as that B point was passed, it was passed the week of November 14th, 2016, 248 million shares. So on a weekly basis, you have a confirmed, I mean confirmed, A to B equals CD to the upside. And right now, price may have found support. It's right now trading into the top of the weekly profile, 140.09. You just simply can't rule it out. And these are the tools that you and I use to assist us with answering the question, hey, Steve-O, what is price doing? Well, right now, it's traded all the way back down to support, which is the top of its weekly box. And that is the IWM. Okay, we've got another question that came in here. Let's go take a look at it. So hopefully that helps you out, Phil, with regard to looking at it on multiple different time frames. Of course, we did switch between the futures contract and the actual ETF out there, but that way we have a little bit for everyone to take a look at. Now, Tom wants to take a look at UGAS. So Tom is long UGAS. UGAS is the triple ETF for the natural gas futures contract, I believe September, which is just simply the September contract that is active out here. So looking to see if the UNG tested the lows of February 29th and failed yesterday. With that confirmation, I may keep it until tomorrow. Natural gas rumors come out. Okay. Let's go take a look at it. But let's start off by taking a look at the September contract and its market profile, since they seem to really provide us with some good information out here. So as we take a look at it, you're going to get the 60, the 240, and the daily profiles. And what we're really looking for is bullish confirmation, new profiles occurring, stuff like that. La-di-da. And if we take a look at la-di-da out here, what we're going to see is right now on the 60-minute time frame, the profile that formed several hours ago, unfortunately, it formed inside the prior box out there. Now, I haven't been able to find a great way to utilize that data. What I do know, it's not a bullish message. It's not a bearish message. I guess I have found a way to use it. It's really kind of more neutral. Now, the box itself has a bullish structure, but you really like to see new boxes form above prior boxes, especially on shorter term time frames, to give you that additional bullish message to stay in the trade. It doesn't mean you should get out. I'm just saying, you don't have inside the September contract the type of confirmation just yet you'd like to see. A close above 282, 2.823 would assist with that, but it's really 2.865 that you're looking for. Steve Rhodes with TFNN. We'll be right back. We'll go take a look at UGAS.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV. Directions daily, 20-plus year, bull and bear, 3 times ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's up 37. S&P's off a couple. NDX 100 slightly green, up 4 points out here. So just to assist Tom and help him out, if we take a look at natural gas now, here I just have the continuous contract, but it will provide you with the type of information that I think you're looking for out here. We can see that price is trading below Stevie's red line. That's up at the 288 level. You have a price oscillator that is below zero. That means we still have a falling price oscillator below zero. It says unless you can really identify a great pattern out here, that this is not giving you the best of signals. That doesn't mean that the trade doesn't work out the way that you want. It's just not the best of signals for you inside of the underlying instrument with inside UNG or UGAZ. And if we take a look at UNG, because you did mention that, we can also see the same pattern here, right? You can see right now UNG trading at 634. You've got a falling price oscillator. We know that because price is below Stevie's red line. That's 644. If you were above 644, then you can easily justify reasons why you would certainly want to stay inside this trade out here. Yesterday's candle wasn't any type of bullish reversal signal. It was green. Might have been mean, but nonetheless, there's nothing to identify for you that the bulls really want to defend this area. That is inside, of course, the UNG. If I put in UGAZ out here, so we don't have a bullish reversal signal inside of the continuous contract or even the September contract for natural gas. We don't even have it inside of UGAZ. We do know that UGAZ was moving lower with less relative energy, but until you see a bullish reversal signal, it's just not there. Now, I'm not saying to exit the trade. I'm just providing you with the information about what the charts are providing to us. You just like to see these signals get confirmed. What you really would like to see is 1134 get taken out. Now, you're talking about holding that until tomorrow. 1134 inside UGAZ, that might be your go, no-go, or where you would take your profits out here. So that's our take, and take a look at the daily charts. And Tom, thanks for writing in, and I hope that assists you. I don't believe there are any other questions out here. If I've missed something in the den, please please retype it in. I didn't see anything by email, so let's take a tour at some of the normal things that you and I take a look at out here. Let's start off by taking a look at the yen. As we take a look at the yen right now, it is in essence flat. And so with it being flat, here is the currency pair out here. And what we know about it, what do we know about it? Well, number one of the things that we know from low to high, meaning from June 14th all the way to the high that was put in on July 11th, little key reversal session, that the Japanese yen has made a 0.786 retracement. Now, this morning, we saw a nice little bounce inside the currency pair, and price bounced up to the top of its daily box. That has acted as resistance. We're now down below the bottom of the box out here. It also bounced right back up towards the bottom, this point of control on the weekly time frame. No bullish reversal signal yesterday. We've got a test of a previous swing point, but there's not anything here to suggest to you or I that price wants to start moving higher from here. If price were to move higher, that in fact would go ahead and put some pressure on gold. Gold is basically flat at this stage of the game. So if we go take a look at gold, let's switch over and take a look at the different profile levels inside of Stevie's synthetic contract for Goldilocks out here. And we'll take a look at the 60, 240 daily and weekly profile levels out here. And the 60-minute profile, nice and bullish. It's got these now prices made a 100% move on the short-term time frame. That means just coming back into a prior swing point. So a natural area for a stalling formation. There was a brand new 240-minute profile that formed, both below the prior low and above the prior high out there. That's always confusing to me as well. What that does tell us is that resistance is at 1276, support at 1267.50 out here. The daily chart still bullish. The weekly chart says 1283.60 would be the next up on the price level. If we come here and we take a look at the, I think it was the continuous contract. Let me see if it was for gold, and we put it on the weekly basis. We know that the trend line price is still above that long-term trend line. And that long-term trend line taking us back to the highs out there when it was priced at 1923. Now, this is a long-term trend line. I don't know if it's going to be closed above by Friday. To me, I'm more interested in Friday. But I am taking a look at what is it doing on a daily basis. But what I can share with you is as of 1:47 in the afternoon, on August the 2nd, we got a little breakout party that is going on. Now, that is also being confirmed by what we just looked at inside the currency pair for the yen out there. And if you're wondering, why is it that Stevie focuses on the yen versus the U.S. dollar, it's for this reason. And for this reason, as soon as I can find it, here's our correlation set of charts out here. Here's our correlation. Now, you're going to see 4 different charts where we're correlating 2 different things. And what you and I are going to focus on right now is the bottom set of panels out here. The left-hand side is the panel that takes a look at gold on a daily basis. And the bottom is correlated to the U.S. dollar index. Now, theory says if the U.S. dollar is pulling back, then gold would be moving higher. And if that were the case, all of these red lines down here in the lower left would be below the zero level. And you can see oftentimes they are. So there is that, what we'll call that correlation, that inverse correlation that you would expect with regard to the U.S. dollar. But is it as good as taking a look at gold and yen futures? And the answer is absolutely, positively not. Because that is the right-hand portion of our chart out here. That's the bottom right-hand portion that takes a look at gold, and then down below it is what this chart is correlating to, and that is yen futures. And you can see they're all above zero. Now, this is done over a 20-day look-back period, but they're all done on the same time period out here and provide you and I with a solid reason as to why we focus so much on the yen with regard to gold versus the dollar. Because the yen is just simply providing you and I with more consistent signals out here. Then, hey, it's nice when they both confirm the same message. And right now, you actually have that same message being confirmed. The top two charts, you might ask, what are we looking at out there? Well, the top chart on the left-hand side is the Dow, is the diamonds, the Dow diamonds. And that would suggest, because many people have said, hey, the diamonds are going to do well when the U.S. dollar index, which is what it's being correlated to, is falling. So here you would also be looking at the inverse correlation. And we can see here that if you're going to make your decisions about what the Dow is doing and the U.S. dollar index, you got to ask yourself, why? In fact, really since last October, you'd have to say that the dollar's been moving higher and the markets have been moving higher more often than the other way around. Hey, that chart on the right, that's Apple and the Qs. You think that correlation is important? Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Guys, welcome back, folks. Dow's up 40. S&P is down a couple. DX 100 is up 10. Transports, interestingly enough, are up as we speak right now. Susan writes in and asks the question. She wants to know if today is a Hindenburg omen signal. Very technical question out there, Susan. So let's go take a look at it and figure that out as of 1:54 p.m. And this year, what she's referring to is, I forget the name of the chap, David White. I think you interviewed this guy. The name will come to me. But in any event, he developed this signal, referred to it as the Hindenburg omen. That certainly sounds ominous to me. And what's required in order for a Hindenburg omen signal to be generated, and it needs to be at day's end. But Susan, I will answer your question. Yes, today, as of 1:55, it is, because what we have right now is we have both the new highs and new lows inside of the New York Stock Exchange being greater than 45. I don't know if it's going to be like that at day's end. As we speak right now, you've got 114 equities that are at new highs, and you have 51 that are at new lows. So that's the first element that you must have. You also need to make sure that where the New York Stock Exchange is trading at today is above where the NYSE's high was 50 days earlier. Well, if I just simply go back 50 days, 50 days would take me to a high of 11,592. We're at 11,967. So that's not a threat out there. So definitely we are above that. And then the third element that you need is you need that advanced decline oscillator reading to close below zero. And we're definitely below zero. We're at minus 30.57. Now, I just happen to keep track of these signals out here. We're just looking at some of the signals for the last year and a half, almost 2 years out here. And those are the red arrows that you see on my screen. There may be even a few more out here that I just simply overlook because sometimes I just get tired and bored of this because the signal, yeah, that's right, Jim Micah. Thank you very much, Polar. You can see how well, actually you can see how poorly this signal has worked out here. So don't let your skirt get in a tizzy out there, Susan. Yes, today looks like it's going to be, well, at least since December of 2016, at least 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Maybe the 12th time is the charm out there. I think there are much better patterns and tools. By the way, it's only relevant for the next 30 days, next 30 calendar days out there with regard to this signal. It was something that was present before other significant declines out there, but really, it's not a very good indicator of things to come. It sounds scary. Sounds very scary. But it just simply doesn't work that well. So anyways, short answer to your question, absolutely. Looks like today, by day's end, we'll be Stevie will be putting another red arrow up here, and we probably won't pay much attention to it until we see some other signals of some type of significant market top. And that, folks, we just don't have. Yeah, we got this little gurgitation sideways move, kind of similar to what you and I looked at inside of the 5-hour chart going on out there. So maybe we have some churning and burning during a cycle, a time period, a seasonal cycle where it's unfavorable. We'll see. Hey, somebody who might have an idea about that, Basil Chapman. I think he's got a workshop tonight. That would be worth going to. Coming over to the homepage at TFNN.com. Check that out. And, hey, how about today's Facebook deal? Come over to TFNN's Facebook. And I wish I apologize. I don't remember what today's request is. In any event, folks, I'll see you on Terrific Thursday. Have a great Wednesday. Stay tuned. Your favorite polar bear in mind, David White's up next.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching TigerTV.